Hello, my dear listeners. It's time for another gold and silver update. I will cover the most important events that is happening right now in related to gold and silver, and I will comment on them. I will comment on the bond crisis, and I will comment on what is going on in the United States with the Fort Knox auditing and gold leasing. And at the end of the video, I will look at the gold silver charts. So let's start with this Mike Maloney very important statement.
Silver I've accumulated and I don't sell, and so I do believe though that Trump wants to go back on a gold standard, but it would require unwinding all of these gold leases first, and to unwind those gold leases shrink right now. If 1 metric ton can support 100 metric tons, and this is like a maximum I think that Jim is estimating here. It probably isn't 100, but if the entire paper gold world, I ate an avocado a little while ago, is leveraged about 101 to the physical gold world, that means that the entire gold market is hallucinating that there is 100 times more gold out there than really exists. And that means the price is suppressed from where it would naturally be trading if they were trading real gold. But they're not. They're trading hallucinations. And so I said that the Treasury isn't leasing this gold. It's central bank gold leasing, which is a proven market. It absolutely exists. And here's where our gold is. If you go to the Federal Reserve, this is federalreserve.gov, and you go to their H.4.1 release of Federal Reserve balance sheets, factors affecting reserve balances, you scroll down to the very bottom, and the very last table in here is collateral held against Federal Reserve notes. And so this is currency in circulation. It's the $20 bills in your wallet. And here is the gold certificate account, $11,037,000,000, and at the statutory price of $42.222222 out into infinity dollars per ounce. $11,037,000,000, I believe, is 99.7% of all of America's gold, which is your gold and my gold. It's not their gold. This was nationalized by Roosevelt, illegally, basically, violating Article 1, Section 10 of the Constitution of the United States, which is a treasonous act to do that. And nationalizing America's gold. When somebody uses the word confiscation, they're usually using it as a scare tactic to get you to buy something that's overpriced. So moving on. What happened to the Fort Knox? This is Chris Martinson. I love Chris, friend of mine. What happened to the Fort Knox audit? It was canceled due to lack of resources. If the gold belongs to somebody else, then yes, there is a lack of resources.
Okay, so what we have here, the most important thing that I would like to add to this, the government is not interested in replacing their fiat currencies by the gold standard. That's, in my opinion, it's only going to happen if they are forced after we go into the currency crisis. So it's going to be the forced event, but it's not going to be they're not going to sabotage their own currency. They're not going to sabotage the dollar by going auditing the Fort Knox and saying, oh, there is no gold. They're not going to sabotage the dollar by devaluing, they're saying, okay, now we're going to bookmark the gold price at 3,500. They're not going to do that unless they have to. So that's my take from, because there is a lot of expectation in the silver gold community that the government, if they devalue the gold dollar against the gold for like a $10,000, there is $5,000, wherever. There's a lot of videos I see, and people are speculating on that. I don't see any interest of government. It's the last things that they will do if they are forced to, because there's a currency crisis and they need to replace the means of payment by something sound. Only in those conditions they will transit. But I will first would like to see some kind of gold silver standard, gold legal tender. Sorry, the gold silver legal tender. That's I think that's the after the currency crisis, that's the most possible solution that the government will be implementing. Now, this second thing, it's about the bond crisis, because there is a bond crisis in the big countries. Well, I think the Americans are safe because they benefiting intermediately in the meantime of the world reserves status, and there's still lots of countries using their currency and holding the American bonds as a reserve. Even the trend is selling those bonds right now, and it's accelerating. But there is lots of countries like Canada, UK, and Japan, that their currency crisis, the bond crisis, is already going on, and it's already present. Let's take a listen. What's is going on in the UK?
Despite the Bank of England cutting rates 5 times in the past 12 months, yields have shot to the moon. We are now at 5.7% for the first time since April 1998. That's a 27-year high that really highlights how disastrous the entire situation has gotten. Now, when yields go up, this inflicts a double whammy on the British government. Existing bondholders lose value, so they get very, very pissed off. Interest payments on sovereign debt starts to rise, especially when you need to roll over all your borrowing. Now, the UK's debt to GDP also stands at a terrifying 100%. So the entire economic output is equivalent to the country's national debt. But unlike the United States, the UK doesn't hold the reserve currency, which means there isn't an organic demand for pounds like the dollar. And in a worst case scenario, there's no way for them to print their way out of this mess. It will just lead to hyperinflation. It's so crazy that the UK might actually need a bailout from the IMF. Imagine that. Just a decade ago, this would be unthinkable. But investors are not optimistic in the slightest of the British economy. The UK today is now caught in a fiscal doom loop. The party today wants to increase taxes on the country to raise revenue. At the same time, there's no commitment of big spending cuts. So what we have is smaller private sector and bigger government. There's also big speculation of a 50 billion.
Okay, so that's what is going on in the front of the bond crisis, and the other very important development that is happening right now is in the BRICS countries in ACO summit, where they creating the alternative to basically use their own currency and to settle the difference in gold. Gold to Shanghai exchange, and let's say if you have a surplus of yuan, you can buy gold with this surplus of yuan. If you have a surplus of rubles, you can go to St. Petersburg, and will be exchange where we will be able to exchange rubles for gold and rupees and so on. So the gold will become the settlement mechanism between the countries, where they will settle their trade deficit. And that's, I think, well, where's we heading? Where we heading? So it's not going to be possible for any countries just to print their money and go around the globe and buy wherever they need to compensate for their consumption. Okay, so now there is a chart of gold, and there is something that, well, I noticed, maybe other people noticed. Last time we broke here the top of 2870. We actually never revisited that price ever again. So the gold went here to 3500, and the retest was about 3200. So we never traded in that region. And I, before making a video estimate, this move was 22%, and if I measure from the breakout to the top, and if I measure the current breakout and add 22%, actually it gives me about 4200. It gave me 4200, which is very technical target of this breakout for the next target of the gold. So this is a silver gold ratio. Well, on a weekly chart, I want to look on a long-term chart. So, well, I see that now 75, it looks like, you know, the down support, and even 83, it's a value area, whereas this gold silver ratio been you know, trading around for a long time. But now the 75 became very well, I think it's going to be a strong level for gold silver ratio. But I still favor silver over gold until we reach at least 75. So now this is a daily chart of gold with the GDX. It's gold miners, gold producers ETF, the biggest one. So you see how it's outperformed. What is well, this actually gap in the percentage of the performance. So, well, I looking to buy. I would like to buy miners. I can say hoping for the pullback. Maybe it's not gonna happen. Maybe it's not very good word to say hoping. But I think if the gold retraces or corrects down, we will see a correction here, at least to that level in GDX, this one here, to basically 54 in the low 50s price, where is the support. That's basically the best I'm expecting on the downside. While there is the sky is the limit. Well, if I look the long-term GDX prices, I agree with Peter Schiff on the thesis that gold has, those miners have a long way to go, because we only back on a 2011 high now. But I should say something about, if you go and look at lots of those miners, they've been diluting their shares, so there is lots of way more shares now. So that's the big problem with the sector, unless you're talking about like a dividend paying companies who are already buying back their stocks. But there is a few of them, but lots of the gold miners, they are unfortunately diluting their shares on long term run. Okay, so that's going to be it for this update. Please like and comment to support my work. Thank you very much for watching.